Good morning. Welcome to Trading with Larry. Larry can't join us today. I'm Eric Shamilov, and I'm joined by Clint Brewer, um, Larry's analyst. How are you, Clint? Good morning.
Good morning. Great to be here again. Thank you.
So, uh, Peace on Earth was announced yesterday. The market rallied right at the futures open, and then Iran sent a couple more 100 missiles into Israel, and then said, "Okay, now we have a truce." So that's the top news this morning. I think markets basically shrugged that off and are accepting the fact that Iran probably lost the war unless something comes out of left field here. But it seems like the situation is pretty well contained. I think the market has a big green light. That's what it's acting like. The VIX has come off, and a lot of geopolitical risk premium embedded in the VIX, and now all of that is basically coming off. So we basically have a green light for all-time highs. What do you make of the newfound geopolitical situation here?
Yeah, I mean, I think you broke down the market reaction. I think the market reaction throughout since Sunday night really has told you that an easing of tensions was on the way. I mean, even after the U.S. dropped bombs on three Iranian nuclear sites, there all it could really muster was a little bit of a negative reaction that you expected at the open of futures Sunday night, which was a risk off move with stock index futures lower, gold up, oil up, dollar rallying. As you guys recap, by the time yesterday morning rolled around, most of those moves had been reversed and were pretty flat. And then even when Iran launched that strike against U.S. bases, apparently it was well choreographed in advance. It was communicated to U.S. officials that it was coming. They kind of had to do it to save face, I guess. But there was barely there was a little bit of a reaction off of that event that was quickly unwound. And again, you're seeing the unwind this morning. I mean, gold's down over percent. I think equity futures are back near recent highs. Dollars off a little bit. So yeah, I mean, all those things point to, even like you said, the Israel attack this morning. There's some headlines around Trump and his displeasure with what the Israelis did after announcing that ceasefire. But even with that, it looks like everything's still holding in. So the market's broadcasting that there's no big concerns right here. That there's another escalation of conflict coming, or that maybe something would happen in the Strait of Hormuz. Like, that's all. It's a nothing burger at this point.
Oil basically just continues its landslide down, right? I think there was a from what I understand, there was a big hedge position initiated last week, and that created a lot of negative gamma in the crude market. The crude market has become extremely financialized. I think by orders of like 50 to 60 times more than what's actually used on a daily basis. So somebody put on a gigantic hedge, created some negative gamma in the options market, and over the weekend, all of that basically came off. Oil fell $10 from peak to trough Sunday night, and it's just interesting how things work out that way. Everybody was fixated on the market reaction Sunday night. How is the market going to open? What's oil going to do? As soon as the futures market opened, it's like everybody in unison just went the other way. And we have some follow through this morning. I think the big question on people's minds is, do they just um, follow this momentum all the way to new highs? Um, or do they continue to proceed with caution? I think technically the green light is there. We had all sorts of breakouts. The momentum is there, and the market just continues to like brick by brick climb a big wall of worry. I think yesterday the big tell for me, I was just watching Bitcoin, even on uh, when the market kind of fell at first yesterday as Iran started to bomb Qatar. And as soon as everybody realized it was just kind of like a telegraphed paper tiger kind of event, just to kind of save face domestically, Bitcoin was the first one to reverse, and then everything followed after that. So it was continues to be a headline dominated market. I was talking to Larry yesterday. He was like, "I have never in my life seen a market like this," and it's true. I mean, all year long, all the market action is completely headline driven, and traders. I think a lot of traders are. If you don't know how to step away from the headlines and kind of plan to react to them, it's very difficult because any position you put on, it's basically a coin flip. Is the next news event going to be good or bad?
Yeah.
Um, so from a trading point of view, me personally, I'm keeping positions in between headlines as light as possible, kind of like core positions, and then as soon as the headline hits, then I start adding based on the what I feel is the appropriate reaction after the fact. Um, but it's like a coin flip, putting on a big position before a headline just feels like a coin flip, and the market is flipping a lot of coins every single day. So I just wonder what's next.
Yeah.
Are there going to be any
Well,
headlines next?
there would definitely be headlines, but like you said, I mean, it's important not to trade off the headlines because you're just probably going to get your butt handed to you that way. You have to be able to sort through the noise. And look, great good example is so Larry has an e-letter. It's free to sign up to Trading with Larry Benedict if you want to sign up for the e-letter. And we wrote recently before all this hit over the weekend. I wouldn't call it an extremely bearish piece on oil, but it just said hey, this would be a logical spot for oil to reverse because you had oil's gains, its jump came off of a reversal from a descending triangle. And a lot of times when you have a failed breakdown like that, the move in the opposite direction can be pretty fast and furious. So that's when we had the big spike in oil, but that rally took it right back up to what I would call trend line resistance off of the highs made in 2023. So we came right up to that level. So there was a logical resistance level, and at the same time, the RSI, the Relative Strength Index, hit. I think it was 77, and that was actually the most overbought oil's been since the last really big geopolitical event driving oil, which was Russia's invasion of Ukraine. The last time oil's RSI got to that level was in the weeks after Russia's invasion of Ukraine, and that marked the top for oil back then. So you had, again, looking through the headlines, you had at least the conditions in place to see, I would just call it a mean reverting move lower now in oil, which we've had. And now, I mean, yeah, now we got oil back down to the 200-day moving average. Is this a spot where maybe it stabilizes and you start to step in a little bit if you're willing to play a snapback too hard the other direction? But there's a lot of headline a lot of headline risk around doing so, I suppose.
I guess for oil, the big risk was the Strait of Hormuz, uh, and it
I
just
I can't see them. I can't see them doing anything there. I think
right.
I think
So
that yeah. Look, I mean, look, 80. I was just looking at the numbers this morning. Like 84% of the oil that goes through the Strait of Hormuz goes to Asia. So who's they close the Strait of Hormuz? Who's going to hurt the most? I mean, yeah, we'll feel it via higher oil prices, but China is probably one of their most important called allies right now. And so, are you going
Well, that's
to?
interesting. You mentioned, yeah, I think that's a very good point, very interesting point, and it's interesting you mentioned China and all the customers that Iran sends its oil to. They where are all Iran's allies? I feel like Iran has all of its friends are gone. China hasn't really stepped up, and that was the real surprising thing. I was kind of watching China's reaction this during this whole war, and there hasn't been one. They haven't been vocal. They haven't done anything, and Ray. I'm a big follower of Ray Dalio. I read his stuff. I've been reading it for a long time, even when he was involved in the day to day at Bridgewater, and he writes a lot about these um, big changes that are coming to the world, and how China's this big superpower, and they are, and but this is an event where China would you would assume China would try to be more prominent, and it just was completely invisible, which I thought was very interesting. Russia has its own problems with Ukraine and whatever, but China, I was kind of surprised at, and I thought they were um, visibly invisible.
Yeah. Well, I think it's that. I think it's that exposure. You know, there's a huge risk for them right now, and that's on the oil supply side. You know, that's that. Like I said, 84% of what goes through the strait goes to Asia, and I don't know the numbers off the top of my head, but I'm assuming China is one of the top destinations for that crude. So, I mean, there is a huge risk for them, or at least China's very staked in seeing easing of tensions like we've had. So who knows what's going on behind the scenes in terms of maybe pushing Iran toward negotiating a truce or a ceasefire, or whatever the case may be. But you know, I yeah, they're very exposed to needing to see a de-escalation to keep the flow of crude to the nation, because they are, I mean, they're I don't know their import export status, but I mean they're a net importer of oil.
They should import our oil and LNG. I hope Trump gets something done on that end. Imagine if all of these, like China, Europe, Japan, all these countries start actually buying our stuff, like especially in the energy sector. I think it would be a tremendous development. I hope they get that done. But yeah, I think China should be buying our stuff, right? That would be
We you know what, we need to buy more of our stuff, because I mean, I know it's a kind of a unique event, but I'm sitting here in the Midwest with a heat dome, and we're getting warnings from it's the nation's largest grid operator to be on the lookout for rolling blackouts because they don't have enough supply to meet demand. And they point to, well, there's more capacity coming. We're building two new natural gas plants in my area, but they haven't been started. Construction hasn't even started yet. So I don't know what kind of red tape they have to go through. But one of the specific things they pointed to in my area for reasons why there could be power outages is due to the demand coming from data centers. So there's been a lot of data centers going up around this area, and I'm not too far from where Intel's building their new chip foundry. That's all new sources of demand for energy, and no new capacity has been brought online. I think just the you look at the data center, the AI build out. I mean, that's a bullish tailwind for energy prices. That's a bullish tailwind, especially for natural gas, at least in my opinion.
yeah. The other, I think that's a good point. The other thing is we have our oil refineries calibrated for Brent crude on the East Coast, much more than for WTI, right? And look, you mentioned capacity. It's all about capacity. It's all about the infrastructure. So yeah, I think that would be a great, very pointed investment into the U.S. domestically. But yeah, I mean, it's still China could be buying our stuff. I was talking about Bitcoin before, and it's interesting. I'm bullish on Bitcoin, and I was talking to Larry here on the podcast yesterday. Bitcoin was looking pretty good to me at around the 100,000 area. It's now trading at 105, right? It's trading at 105. Ethereum's back up. All the altcoins, I'm just looking at the board here. It's pretty much all green except they're all green, thoroughly green. All right, so you would expect Circle to be rallying here. I just want to share this chart of Circle just to put things into perspective because that's the hot play right now, right? Circle with the stable coin, and I mean this thing is up 250% since its IPO price. And Circle is down this morning, and you look at the news. Circle falls after rated neutral at Compass Point on competition. So now the research houses are coming out. They're kind of scratching their head too, right? And then you have this one, which I thought was very interesting. Kathy Wood's ARK Invest cashes out $109 million out of Circle.
Wow.
Exactly. Wow is right.
She's so wow.
Wood for
Yeah, I mean, look,
Kathy to sell Circle, to sell anything.
I mean, look, it's up what, like 700% or something like that from its IPO.
I
I
guess from the
mean,
pre-IPO, but from that
yeah,
initial print, yeah.
but and I mean, it's I was looking at it this morning. I know you and Larry talked about it yesterday. I mean, it's a $59 billion market cap. It probably trades around a 30 times sales. If you look at least the last 12 months sales, I mean, it's yes, there is going. I look. I come from the sell side. I know how sell side approaches this. It's going to be hard for an analyst to justify, putting a buy rating on something trading at a 30 times price to sales ratio right now.
Oh, I've
Uh,
seen that. Come on, we've seen that. Come
okay,
on.
I couldn't do it. I couldn't do it.
It's
So
hard
maybe
for a sell side analyst to put
here.
a buy
Look,
rating on
all
a
right.
blended stock. Come on.
Yeah. Look, I circle aside. The circle timed it well. Let me put it that way, because you had the whole this Genius Act thing come out. So there's you already had a lot of support coming from Washington for crypto. It's a crypto friendly administration. Then you had, I don't know all the details behind this Genius Act, but I know it was a big thing. But I think this week, actually it was yesterday, I saw what, if you're bullish crypto and you're bullish stable coins, if you're bullish blockchain, I think you probably had one of the most bullish headlines hit the market yesterday, and I'm going to guess it went mostly unnoticed by many people. And it is that Pfizer, the headline says Pfizer debuts bank-friendly stablecoin as fintechs join the digital dollar race. If you want adoption of crypto, if you want adoption of stablecoins, if you want to see the blockchain proliferate, then you need to start seeing these major payment infrastructure organizations start to adopt it, or put things in place to use it. And Pfizer, they're a big fintech. They're one of the giants in sort of the payments space, and all the infrastructure and piping that enables payments. And I think they're teaming up with Circle on this project. But that's what I mean. Like, that right there is probably one of the most bullish things for blockchain that's come out in years, in my opinion, because if you want it to grow, if you want it to expand, you need those types of payment providers to start adopting and implementing this technology. Sadly, more people probably heard or saw a headline about Fartcoin, earlier this year than what they're going to have heard about this news with Pfizer, but this is undoubtedly probably one of the most bullish things, and then probably a reason why, Circle um, has had the move that it's had. I mean, it's just like, again, all these things have lined up with Circle timing the IPO right, with this Genius Act, now with this news. Um, yeah, I don't know a ton about the stablecoin market, but it's very interesting to see the momentum that's behind it right now.
Yeah. I wonder if it's now going the other way though. Hype is hype, and those option premiums. I'm just looking at the board. I thought the option premiums were crazy before. I think they're even crazier now. I mean, a July. I'm just looking. July 18th. Um, $400 strike on Circle. $400 strike
What's the trade at now?
is 1250 is around 1650. Okay, so for folks at home, what that means is to break even on this, uh, from an intrinsic point of view, the stock has to trade above, not just above 400, but above, it's 400 plus your cost of the option. So to make money on it, basically, Circle's got to go above 416, right, by July 18th, which means pretty much
Which
doubling from
I would
from
say
here.
that'd be 73% upside from where it's at this morning.
Now, it's possible, obviously, but is you know those option premiums look pretty good to sell
Are you
in
say,
my.
are you selling
You know what? I already got burned on it, but I'm gonna sell it again. I'm gonna roll my position.
call spreads?
Call spreads, yeah, call spreads. Being long certain cryptos is uh, is helping, so I'm gonna stick to that and try to play the little bit of the downside in Circle. I do think it should be coming down as some of the hype starts to kind of wither away. I would say Kathy Wood selling is a little bit interesting,
Yeah.
especially coming from her.
Yeah. I mean, you have to expect a mean reversion move to the downside at some point. But, again, the momentum that's kind of behind the stable coin movement at the moment is definitely there. And you mentioned too something, just from a broader market perspective, some of the stocks that you saw rallying and breaking out yesterday definitely speaks to the risk on sentiment. I think you can definitely keep an eye on Bitcoin here for the next move. I mean, so Bitcoin peaked around the 110,000 level that was back in May, and it's just been pretty much in a range between that level and 100,000. Bitcoin, I think Larry mentioned it yesterday. I mean, Bitcoin, you look back, it's been very correlated to movements in the Nasdaq. I think you can look for, just you don't have to bet on the direction. I mean, you just wait for the range break. Watch Bitcoin's range break between 110 and 100,000 for maybe the next move on the broader market. I mean, it's starting to coil up a little bit. I mean, it's getting trading a little bit tighter inside that pattern. You can be patient, just wait for that pattern to resolve to tip maybe where the broader market's going to be going.
So on a breakout, let's say the market loves the ceasefire. Everything is fine. They're looking at the Middle East as a new destination for tech exports, for all sorts of exports, and I think the market. It's interesting. The Israeli stock market has been just going up all throughout this war. Saudi Arabia, all these countries, um, and Larry and I were talking about it. Maybe that was the big tell. I mean, Israel is directly involved in the war, and their stock market is just flying higher. I think it's up now 50% year to date, and even since the Iran thing happened, and they started taking out their capabilities a couple weeks ago. Their market has been doing nothing but going up. So it looks like the market is viewing the Middle East and the developments in the Middle East as very bullish and a potential destination for new business. Saudi Arabia is hungry for tech. They want to incorporate all of the technology, develop all of the AI into their economy. Israel's obviously a tech powerhouse, but yeah, it looks like if this kind of calms down, the market is looking at all this like a big net positive. So if that's the case, if the market starts to rally to all time highs, I'm trying to figure out what is the right segment of the market to really be focused on. What do you think?
Good question. So I would I would maybe lean back into some of the dominant themes that have been driving the market since the 2022 lows. So I come back to the AI theme, but I don't want to jump into and trade speculative AI plays. I want to trade. I want to look more at the companies that are the pick and shovel type providers into the industry. I mentioned
So is
all the
Palantir a picks and shovels play?
when I talk pick and shovel, like so, to enable AI applications, you need data centers. I mean, data center demand. I mentioned from the power perspective is huge. I mean, you can just see the impact that they're having, the rate at which they are going up. And I anecdotally was speaking with someone the other day, and they said one of the major holdups in building out data centers more quickly is shortages of cooling equipment. So these HVAC systems, cooling equipment. So I look at companies like Carrier, ticker CARR, or Train, ticker TT. These are, they don't get a lot of attention because they're just boring old HVAC companies providing, cooling and ventilation equipment. But they've got some real momentum behind their financials, and the setups with these that look, from a breakout perspective, is that again, you look at TT, you look at Carrier, you can look at Fix as well, ticker FIX. They're all. I think they broke the new highs just marginally, and now they've just been grinding sideways for the past month or so. So if those things start to move and break out, I think that's an area that I would be looking to. Again, call me old school, but I mean, I don't want to jump on the no sales, no earnings AI speculative plays. I want to find a name, a company that's levered to the theme, that actually has some fundamentals behind it.
So is Palantir a picks and shovels play or no?
I don't know that I would traditionally
Define picks and
classify
shovels.
them as a pick
I
and
mean, they're
shovel. I
gathering
under
data,
I understand their product and their how entrenched they are in certain industries, and that gives them a very hefty moat with under which to operate. But the run that stock's had, I'm not doing anything with. I'm not betting on it. I'm not betting against it. I'm stepping aside when it comes to Palantir right now.
I gotcha. I gotcha. So, it's interesting you mentioned momentum and the trend from 2022. The longer term trend is somewhere to look if the market starts to really, you know, drive higher. Now, look, if Larry was here, he'd chew me out right now. He's like, the market is dropping big. And the question is when? Is it now or I think from a bigger macro perspective, I think at this point, the only thing that could really get the market down is it going to be tariffs? No. We went through that. The market already priced this in. It was a nothing burger in 2018. Headline induced, you know, intraday shocks. The market would come right back. This year, obviously, much more pronounced, but at the same time, it was the net effect was exactly the same. You had
I,
intraday shocks, and then the market will come back.
yeah.
What?
I'm gonna disagree with you really quick on 2018 because I think if you're looking for the catalyst that makes us drop, I think there are parallels there, and that's because yeah, the tariffs weren't an issue, but the Fed was very hawkish. We had pretty much a 20% peak to trough move late in 2018, driven by a hawkish Fed. We didn't reverse course until Powell changed his tone. And I think this time around, it's the same issue in that the Fed's making a policy error. They the Fed
That
funds
was
rate right.
that was in the. I'm talking about 2018, the first the first part of 2018.
Okay,
The hawkish Fed was later in the year.
that was late in the year. Yeah.
That was later in the year. And that's the point I wanted to get to. I think where the market is going to find an issue is once again, maybe 2018 is a great blueprint for this year in some way, where the first half of the year is kind of all tariff related price shocks in the market up and down. And then towards the end of the year, I think where the market will have a problem is again just going to be interest rate related. And with a Fed that may not cut as people are hoping they will. My biggest takeaway from last week's Fed is how the dot plot showed how divided the Fed has really become on the rate cut issue. So I think that's where we could possibly get a problem exactly like 2018. It's going to be Fed related, it'll be interest rate related. But you were mentioning the momentum from 2022. And I'm glad you mentioned that. I'm just looking at momentum stocks right now and ranked by 12-month momentum. Um, the the composition of these stocks on the S&P that are ranked by momentum has changed this year. It's no like it used to be Nvidia. I don't mean like ranked number one. Palantir is still ranked number one in momentum, but now you have like AT&T in there. You know what I mean? You have Fox in there. You have a lot of like value low vol stocks in the momentum factor. So you were mentioning, old school and all that stuff, and you don't want to go after the sexy stocks. Well, a lot of the old school names are now ranked high in momentum. So I think the definition of momentum has kind of
Oh,
shifted. It's no
yeah.
longer just tech plays.
Well, it's probably also a bit circumstantial to sitting here today and looking back because how much of that stuff, the sexy names got crushed during the sell off into April and are still struggling to come back versus the more value oriented low vol stuff wouldn't have sold off as hard and so they're holding up better. I think that's part of it. But that maybe there is a message there that momentum factor is sending right now that if you are seeing the low value, the low PE, low vol type stuff holding up, I mean that can be a reflection on what the market thinks right here as well. I mean, there's just you know we can we can sit here and we can point to we can rattle off 5 reasons why the market should break out to new all-time highs, and we can rattle off 5 reasons why we should reverse right back lower and head back toward the April lows. I think now is probably more important than ever to try to look at some of the intermarket relationships and look for clues on what that next move can be. Because yeah, I mean you have the catalysts are there for either direction, and I don't feel like like sentiment and positioning was so bearish in early April to help support that rally, at least over the near term. It definitely went way further than what I was expecting. I did not expect that rally to carry us right back to near the prior all-time highs. There's not really like sentiment. I mean, it's not really. Last time I checked, I mean, it's pretty neutral. I mean, if you look at something like CNN's Fear and Greed Index, I mean, I haven't looked at where that's at lately, but there wasn't like this really big, you know, bullishness that's out there. All the fear's been wiped away, but it's also not. There's not a ton of. We're sitting right between neutral and greed on CNN's Fear and Greed Index. I don't think the AAII numbers have shifted too much in favor of the bulls either. So it's kind of neutral right now in terms of where uh, sentiment's positioning. Instead of being at the extremes is where you want to bet in the opposite direction. But like I said, I mean, I think you can build a good bullish case right here a little bit. It's probably, in my opinion, a little bit easier to build. It is easier to build the bearish case of why we should pull back off the highs, but there's not that fat pitch like we had kind of at the April lows.
Yeah, there's that's a good way to put it. There, I love the baseball terminologies. I'm a baseball fan, but when you say fat pitch, that's where you're sitting on a 3-1 count, and the pitcher's got to throw you a fastball right down the middle. The problem with this market, and that's where you hit your home run, right? And the problem with this market has been you get a lot of curveballs and fastball counts. So it's been a little bit kind of you're waiting for the fat pitch, and then the market kind of throws you a curveball. Like even just today, right? I'm looking at the board. The S&P is going to open up at around 60-65, right? The straddle is trading at 20. What is it? Let's see. Straddle's at 25, 26 points. You put on you could put on a put spread if you think the market is going to hold it. But then, like any headline comes out, that position gets crushed. So you got to like even more precisely kind of pick your spots. So it's the fat pitch. When are we going to get this fat
If
pitch?
I'm looking, I mean, I don't know if it's a fat pitch for the day, but I mean, I think today you could be looking to sell the call spread because, I mean, there's not, maybe you don't because there's not going to be a lot of premium. You're not going to really get paid as much as you should be to sell that spread. But if you're looking to, I mean, you can take advantage of this pop at the open, look to sell a call spread because I would argue, I mean, the good news is priced in. You had the market reaction completely reverse by Monday morning. You've got, the S&P's up, what is it, another 80, 75, 80 basis points before the open. I mean, like near term, the good news is priced in. I would say if there was a fat pitch today, it's looking at a call spread, but we'll see at the open if the premiums justify doing it or not.
Yeah,
Which
maybe.
means
Well,
for everyone watching, just
what was that?
I say for everyone watching, when I say call spread, writing a call spread for a credit, so you're betting that the market's not going to rise above a certain level today, that you think it's going to stay below, a certain level where you write that strike on the call spread. Just want to clarify for those watching.
Yeah, so you have about a 25-point straddle. Market's going to open up at 60-65. The way that I look at it, you add that straddle to where the market is going to open. So that comes out to 60-90. If you want about 10 points cushion, you're looking at the $6,100 strike. Pre-open, it's trading at 220, which is not a lot.
Yeah,
It's not a lot at all. So if you're looking at an iron condor, maybe try to get that 6100. I think is going to be in play. To the downside, 60-65. You have a 25-point straddle. You're talking about 60-40, and then an extra 10 points of cushion. So the 59-30. I'm sorry, the 60-30 is bid up a little bit more than the calls. Puts are usually bid up more. That gets you $4. So, I mean, you sell a put spread and a call spread right at the open with just a little bit of cushion. All you're getting is like $2.50 on a 10 point iron condor. That's not a lot. That's not a lot at all. So you know, just kind of recapping this. But I just want to go back to what segments that we're looking at. You're looking at more like longer term trend. I'm looking at stocks that are, if the market in general, whether the market goes up or not, um, or stays, regardless of the fact. I think the bigger trend is you had from 2022, from that bear market we had, you had AI become a household name with ChatGPT. And you mentioned a lot of the picks and shovels plays. I don't know what you consider picks and shovels in tech. Obviously, the data warehouses and all that. Um, Maybe Nvidia, right? But all those, I kind of see the Nvidias and kind of like the trade for AI. Um, the phase one, inning one. I think we're heading into inning two, where now application applications are going to be using AI, and so a lot of the stocks, like, I hate to say it, but like Palantir, Snowflake, Datadog, ServiceNow, you have robotic plays as well. You want to look for leaders in process automation when it comes to robotics. Even like, I'm looking at a stock SoundHound right now, right? It's a voice AI platform. Um, it's only NVIDIA has something with voice AI as a kind of a pet project that may be a competitor, but other than that, it really doesn't have many. Um, and you kind of look at the technical setup there. It's going to be very interesting to see what a SoundHound starts to do if it could break above $10 a share. So a lot of these plays that are using AI within their applications, I think, could be the next big move.
Yeah, that's. I think that's. I agree. I think that's a good spot to look. And the example you gave, the comparison I would make, it's like, the iPhone coming onto the scene and then figuring out which companies were, able to really leverage that into a product. That's kind of where we are now with AI, and looking for that next phase. I think that's, yeah, that's that's a good spot to look right now.
So we need to wrap. As always, I think it's great talking to you. You want to get the last word in there before we wrap?
Um, I don't know. I don't. I am. I gave, certain levels to watch on Bitcoin, maybe to watch here. 110 on the upside, 100 on the downside. Let Bitcoin tip the next broader move that we might see in the market. Near term, very like near term as in today. I'm probably looking to sell the rally, and bet that the upside is capped here, and we'll go from there.
Yeah. I'm gonna go with an iron condor kind of day yet again. I don't think the market's gonna drop. I don't think it's gonna melt up today. As you said, a lot of that good news has been priced in already, right? The market already went up. So, but I think people need to continue to let, expect the market to do something stupid intraday. It always does, especially this year, and try to fade the overreaction. And so that's it for today. Thank you all for joining me, Clint. Pleasure as always.
Yep,
Uh,
likewise.
thanks for joining. Have a great day, everyone.